Before you refinance any mortgage, there are certain terms you should consider. The same can be said about the FHA Refinance loan. Any mortgage that you currently have on your property can be refinanced into an FHA loan. Refinancing your loan into a Federal Housing Administration loan provides you with a lower monthly payment, the ability to avoid foreclosure or default, or it can help with home repairs. The refinance loan is different than the FHA HOPE. FHA HOPE is a homeowners program that protects individuals from default or foreclosure only. Their Federal Housing Administration makes 4 types of refinance loans available to you. So the cash-out refinance options allows you to refinance 85% of your home's value. The value is determined by a professional appraisal with the FHA lender. So a cash-out option of 95% of the appraised value. Oh, no cash out. Streamlined FHA refinancing. There are requirements even with FHA refinance loans that you must adhere to. In the cash-out options listed above, the borrower is required to own the home for at least a year before applying for the refinance loan. For all 4 loans, the amount you can obtain for refinancing will be determined by the home's appraised value. The calculation for non-streamlined loans is a bit more difficult, and not really necessary to discuss other than to say the calculation has to deal with the original mortgage and any second mortgages you might have on the home. FHA streamlined loans can only be obtained if you have an existing loan. In this particular loan type, you are not given cash, but the refinancing will pay the existing loan off. This option helps you lower your repayment amount in the event that the interest rates have decreased since you were awarded the first FHA loan. In the current economic climate, the base rate has significantly decreased, allowing interest rates to decrease as well. For a person who acquired an FHA home loan during the housing boom, it could be very lucrative for you to refinance. The downside to refinancing in the current market is the home values. Many areas are suffering from degraded home values, presenting the situation of negative equity. This may limit your refinancing options. If your home value is still on the positive side under the streamlined product, the Federal Housing Administration allows for the closing costs to be a part of the loan if the equity is sufficient. If you are refinancing to an FHA loan, there is no down payment required. This has been somewhat confusing for homeowners. Since all FHA loans require a down payment, homeowners automatically assume this means the refinancing products as well. FHA refinance loans work like mainstream remortgages. Thus there is no down payment in a refinance situation. These refinance loans are available to any person who qualifies for an FHA loan. Most refinance products with FHA require that you go through the same qualification process as the regular FHA loan process.